The top 5 growth stocks that I'm buying in 2023. For me, growth stocks are a great way of generating profits, and in my opinion, these are the top 5 growth stocks that you should know. Not all of them are at the right price currently, but as we have seen in 2022, stocks can fall down quite a lot very quickly. And with the current market conditions, it wouldn't surprise me if these stocks continue to go down even more. And to me, that's a great moment to increase my position or open a position in these growth stocks. Buy low and sell high. I'm very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. First stock on this list is Alphabet, ticker symbol Google. This stock is down almost 40% on the 1-year chart, which is twice the amount of the S&P 500, which is down 20%. Alphabet is the parent company of Google, and that's also the main revenue stream. And I do think we all know Google, so no introduction needed. Alphabet is a 1.15 trillion market cap company, which makes them one of the bigger companies in the world. PE ratio is at 17, which is quite low for a company this big and popular among the investors. This could also indicate that they are undervalued right now. Revenue is at 282 billion, and in this graph we see that revenue went up quite nice and steady. During the lockdown periods, revenue started to increase even more. But of course, after the lockdown periods, revenue started to slow down a bit and continues to grow at historical pace. Profit margin started to decrease a bit as well lately, so this is of course something that I don't like. Definitely keep an eye on this one. Return on assets and return on equity look quite good, above my 10% minimum. And the most important number here, return on invested capital, is at 18.3%, which is very nice. The thing that I like here is the fact that it's above the 5-year average. Next up is the price target that I created using the Everything Money software. For the revenue growth, I'm put in 7, 9 and 11%, since I think they will grow in revenue, but probably at a lower pace as they become bigger and bigger. Profit margin is quite steady and is the same story with the free cash flow margin. PE ratio and price to free cash flow I'm filling in 17, 18 and 19, since I want to pay a low multiple for this big company. However, they have a big moat, so that's why I filled in these numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. I hit analyze and we do see a lot of green numbers. We have a low price target of $85, which is just a little bit under the current stock price. We have a mid price target of $111 and we have a high price target of $145. To me, the mid price target is the most justified here, so Google might be a great stock to buy in 2023. However, I do think the stock will continue to fall down a little bit more in the short term. So let's see what happens in the short term. Second stock on this list is Etsy, ticker symbol Etsy. This stock is down almost 43% on the 1-year chart, which is twice the amount of the S&P 500. Etsy is an American e-commerce company that focuses on handmade or vintage items and craft supplies. These items fall under a wide range of categories, including jewelry, bags, clothing, home decor and furniture, as well as craft supplies and tools. Etsy is a 15 billion market cap company with no PE ratio available right now, since profit margin and net income are negative. Revenue is at 2.48 billion, and in this graph we see that revenue went up really nice and steady during the lockdown periods. Revenue accelerated. But after the lockdown periods, revenue started to slow down back to historical growth numbers. Profit margin started to fall down big time most recently, which concerns me a bit of course. However, it's expected that net income will recover very soon. Return on assets looks quite good at almost 12%, and of course return on equity doesn't look good. Return on invested capital, the most important number here, looks really good, at this number as well as on the 5-year average. For the price target, I'm using the Everything Money software. For the revenue growth, I'm filling in 10, 12 and 14%. For the profit margin, I expect things to return to normal again in the long term. So I'm filling in 13, 13.5 and 14%. For the free cash flow margin, I'm filling in 20, 21 and 22. For the PE ratio and the price to free cash flow, I'm filling in 19, 20 and 21. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. I hit analyze and we don't see a lot of green numbers. We have a low price target of $61 to $94, a mid price target of $76 to $118, and we have a high price target of $95 to $149. To me, the mid to high price target is again the most realistic one. So it's not really undervalued. However, I do think this company has a great potential, but the stock price isn't just where it should be right now to generate some profits on your investment. I bought Etsy stock a while ago around $100 and I sold it at $140. For now, I have it on my watch list again at $110. It's not the moment where I'm going to buy this stock, but it's the moment where I'm going to analyze this stock again. So for now, we just need to wait, but the future looks bright for this company. Third stock on this list is Adobe, ticker symbol ADBE. Adobe is an American multinational computer software company known for Photoshop and some other leading design software programs. Adobe is down 40% on the 1-year chart, which is twice the amount of the S&P 500. Adobe is a 156 billion market cap company with a PE ratio of 33, which is a bit on the high side to be honest. Revenue is at 17.6 billion, and in this graph we see that revenue went up quite nice and steady. Profit margin started to decrease a bit in the short term, but in the long term it has increased quite a lot. But still keep an eye on this number. Both return on assets and return on equity look really good in my opinion. And the most important number here, return on invested capital, sits at 22.6%, which is really nice, since it's above the 5-year average. For the price target, I'm using the Everything Money software. For the revenue growth, I'm filling in 8, 9 and 10%. I expect that profit margin will increase in the coming years, so I'm filling in 30, 31 and 32%. For the free cash flow margin, I'm filling in 40, 42 and 44%. PE ratio is a bit high right now, and that's also the thing with this company. You will pay a premium for this stock. I'm filling in 18, 19 and 20. It's the same story with the price to free cash flow. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. I hit analyze and we do see some green numbers. We have a low price target of $226 to $302, a mid price target of $269 to $365, and a high price target of $319 to $439. To me, the mid price target is the most justified here. So I'm going for the $269 to $365 price range. I have this stock on my watch list for $275, which could easily happen in 2023. So for now, I'm just waiting for the stock price to come down a bit. Fourth stock on this list is Microsoft, known for the computing software, consumer electronics, personal computers and related services. This stock is down 28% on the 1-year chart, which is quite a lot to the S&P 500, which is down 20%. Microsoft is a 1.79 trillion market cap company and one of the biggest companies in the world. But still, I do think this could be a great growth stock to have in your portfolio. PE ratio is at 25, which means you will pay a small premium for this stock. Revenue is at 203 billion, and in this graph we see that revenue went up really nice and steady. Profit margin has increased quite a lot in the most recent years, but starts to fall down a little bit in the past couple of quarters. Return on assets and return on equity both look really good, and the most important number here, return on invested capital, sits at 25%, which is an insane good number for a company this big. For the price target, I'm using the Everything Money software. For the revenue growth, I'm filling in 8, 9 and 10%. I expect the profit margin to be quite steady in the future, and it's the same story with the free cash flow margin. Both PE ratio and price to free cash flow are a bit on the high side right now, and I'm filling in 20, 21 and 22. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. I hit analyze and we do see one green number. We have a low price target of $179 to $191, a mid price target of $206 to $225, and we have a high price target of $236 to $265. To me, the high price target is the one that I'm focusing on. I truly believe in this company to do great in the future. However, the stock might be slightly overvalued right now. In 2022, the stock has come down quite a lot, and it needs to go down just a little bit more. Microsoft is one of the biggest positions in my portfolio, and I can't wait to buy this stock at lower prices. Last stock on this list is Visa, ticker symbol V, the biggest credit card company in the world. This stock is down only 6% on the 1-year chart, which is quite interesting compared to the other stocks in this list. Visa is a 438 billion market cap company with a PE ratio of 29. So again, this means you pay a premium for this stock as well. Revenue is at 29 billion, and in this graph we see that revenue went up really nice and steady with a small decrease during the lockdown periods. Right after that, revenue went up again. Profit margin has been very steady for a long time, so this is something that I really like, of course. Return on assets and return on equity also look really good, and the most important number here, return on invested capital, looks great at 24%. It's significantly higher than the 5-year average, which is also something that I like, of course. For the price target, I'm using the Everything Money software. For the revenue growth, I'm filling in 10, 11 and 12%. I expect the profit margin to be quite steady in the future, and this is the same story with the free cash flow margin. Both PE ratio and price to free cash flow are a bit on the high side right now, and I'm filling in 18, 19 and 20. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. I hit analyze, and we do see some green numbers. We have a low price target of $160 to $189, a mid price target of $183 to $215, and we have a high price target of $208 to $244. To me, the high price target could easily happen with this stock. It's a great company that has been very steady and it's still growing in high amounts. For me, Visa could be a great buy during 2023. And this is the full list of growth stocks that I'm interested in for now. These are all great companies with strong moats in my opinion. However, some of them are at a premium price, so I'm waiting for the stocks to come down just a little bit more. And if they continue to fall down like they did in 2022, I'm really happy. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.